Hi class, this is your instructor, and today we're going to be talking about Chapter 4, which includes the General Journal and the General Ledger. And we've got 9 steps total in our accounting cycle, but we're going to take a look at the first 3 today. The first one is to analyze business transactions, which we've been doing. The second step is to prepare a record of those business transactions, which we're going to do today by recording our transactions in our General Journal. And then the third step is to post those transactions from the journal over to the ledger or the general ledger. Business transactions are recorded first in a journal, which lists transactions in the order in which they occur. The journal is sometimes called the record of original entry because this is where transactions are first entered into the records. There are several types of journals, however, all types of business transactions are entered in the general journal. And that's what we're going to be working with today. Some transactions require a compound entry, and this occurs when a journal entry contains more than one debit or credit. And if you have a compound entry, you always record all of the debit entries first and then all of the credit entries. So let's take a look at some of the transactions in our Chapter 4. And I'm using just a spreadsheet that I had from a prior semester just so I can show it on the screen. But a general journal just has a lot of lines, a lot of blanks, and you enter in the transactions as they occur, just as you would like a diary. But I'm on page 91 if you're following me in the book, and by the red-gray bar toward the bottom of the page, it says that on November 6, Carolyn Wells withdrew $100,000 from personal savings and deposited it in a new business checking account for Wells Consulting Service. So, the owner took money out of her own personal account, put it into the business. So the first thing we would do is put in the date, and we always put the year first. Since this one came with 2010, we're going to go with it. And we also, this particular spreadsheet came with September as the month, and we're going to go with that as well, even though it's really November. And then you'll type in the date. And on the first line, you're going to put the name of the account that you're going to debit. And so since we're getting money in, we're going to debit the cash account. And we're going to put in the amount, which was $100,000. And then the account we're going to credit is the Carolyn Wells Capital account. And what we'll do is indent about 1/2 inch and type the name of the account that you're going to credit. And put in the credit amount. And then on the third line, you're going to indent another 1/2 inch, so you're kind of about 1 inch in, and you're going to do a short description of the transaction. And usually here, if there's any check numbers, invoice numbers, or anything of that nature, I include that. If not, just a little description of what the transaction entailed. And I'm just going to say investment by owner. Okay, that's our first transaction in the journal. We're ready for the next transaction, and I'm going to turn the page and follow the red-gray bars again. On page 92, it says, on November 7th, Wells Consulting Services issued Check 1001 for $5,000 to purchase a computer and other equipment. Okay, so we think about what accounts are affected. We wrote a check to buy equipment. So we're going to put in the date, which is 7. And you never have to repeat the month or the year unless it changes or you start a new page. So far we just have the 7. I'm going to debit the equipment account for $5,000. And I'm going to credit the cash account because I wrote a check for $5,000. Notice I always list the debit accounts first and then the credit accounts. And then I indent another 1/2 inch or so, and I'm just going to put check number 1001 for equipment. Okay. The next transaction is on page 93 in your textbook. It says on November 10th, Wells Consulting Services purchased office equipment on account for $6,000. So we bought some equipment. We didn't pay cash, but we promised to pay within 30 days. So we're going to put in the date. That's the 10th. We're going to debit the equipment account for $6,000. And we're going to credit accounts payable. We didn't write a check, but we promised to pay. So anytime we incur a debt, we record that in accounts payable for $6,000. And then I'm going to indent another half an inch or so and give a short description. If you'll see, there's a little picture in our text. It says it comes from invoice number 2223 at Office Plus. So this gives us a little trail, audit trail, that we can go back and find the source document that we used for that transaction. All right, I'm turning the page. On page 94 in your textbook, it says on November 28th, Wells Consulting Services purchased supplies for $1,500 and wrote a check, 10/02. So we bought supplies and wrote a check. So I'm going to fill in the date first of all. That was the 28th. I'm going to debit the supplies account for $1,500. And I'm going to credit, by indenting about a half an inch, the cash account for $1,500. I'm going to do another half an inch or so and say check number 10/02 for supplies. A brief description. Okay, on the bottom of page 94 there's another transaction. It says on November 30th, Wells Consulting Services paid Office Plus $2,500 in partial payment of invoice 2223, and they wrote check 10/03. Okay, so here we're paying on our debt. So I'm going to put in the date, the 30th. Now we're writing a check to reduce a debt. So we're going to debit accounts payable for $2,500. And I'm going to credit the cash account because I wrote a check. And then the little description is going to be check number 10/03 to Office Plus. All right, on the next page, page 95, toward the bottom, it says on November 30th, Wells Consulting Service wrote check 10/04 for $8,000 to prepay the rent for December and January. So I'm going to put in the date. That transaction, I'm going to debit prepaid rent and credit the cash account. So I always list my debit accounts first. And then I list my credit accounts. And then on the third line, I'm going to do a short description. This was for December and January rent. All right. And those are the first 6 transactions recorded in the general journal. Now, as we look at these, if our boss came in after we'd recorded all the transactions for the month and said, you know, I want to buy some more equipment. How much money do we have in the cash account? You can't quickly look at this and tell how much you have in the cash account. Or if your boss came in and said, you know, how much do our customers owe us? Can you tell quickly? Or how much do we owe other people? Can you quickly tell? No, you can't. So what we do is take each line and post it to what we call the general ledger. And what we're going to do in the general ledger is we're going to set up a separate page for the cash account, a separate page for accounts receivable, a separate page for supplies, a separate page for equipment, a separate page for accounts payable, the capital account, and so on. We're going to have a separate page for each one. And what we're going to do is transfer this information line for line over to those accounts. So each one of those sheets will have a running total of what we have in the cash account, or running total of what we have in the accounts receivable account, and so on. So we'll stop here and I'll pick it back up for the second half.